Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. The main immediate pattern here since September 2024 had been, and I suspect might still be after a fashion, the breach September-December 2024 bear channel, which is currently 1830 to 2074, highlighted in dark blue on my daily chart. This pattern achieved its primary downside target mid-January and its secondary hard-to-reach target about a week after the primary target. Interestingly, the move down in the secondary target and back up again formed another new pattern, one which I'll discuss shortly. However, before that, I'd like to highlight again another larger long-term pattern. That is the breached November 23 to September 2024 bearish Andrews pitchfork, highlighted in bright green on my daily chart. This pattern, as I said, has been breached, but last week's actions saw prices turn back down into this pattern, such that we are today in between the overhead upper tine, currently at 1990, and above the middle tine below, currently at 1634. Now, the recent action, especially since mid-December last year, has revealed another newer pattern that had also been breached in early February, simultaneously with the upper tine. This is the one I spoke about earlier. I said 3 weeks ago about this pattern, and I quote, "This is a possible latent reverse head and shoulders pattern, but one that is not well defined, hence not worthy of the name of a reverse head and shoulders pattern," end of quote. Well, since then, this pattern has matured, and we had a very real reverse head and shoulders bottom with a bright red neckline, currently at 2037. But, as you can see from the daily chart, though we saw a break upwards and close over both the bright green upper tine and the bright red neckline last week saw the market revert back downwards, making a very clear weekly key reversal down and closing both below the bright red neckline and the bright green upper tine. This now casts heavy doubt on the bright red neckline, no matter how good it looked previously. This past weekend, with changeover, we have gapped even lower, and we are now looking to test the 50% absolute Fibonacci line for the 21st century at the key 1809 level. That level keeps cropping up. And even the dark blue breached lower bull channel line, which is currently at 1807. This is, even to an untrained eye, a huge move back down, and I have drawn a bright pink late September 2024 to mid-January 2025 bearish Andrews pitchfork to try to make some sense of it. Right now we are in between the overhead upper tine, currently at 1990, and the middle tine below, currently at 1634. So in an effort to get a handle on what further technical areas we're operating here, I went back to my annual commentary and looked at the monthly charts there, and I saw that the bright green Andrews pitchfork, despite the breached topside, still is the dominating pattern here, along with the double top, an Adam and Eve type that had been constructed throughout 2023, and which we had already reached the primary target 1880, as well as yet an unfulfilled, harder to reach secondary target down at 1630. Now, this longer term pattern is the one I choose to watch and see how it develops. Ice Europe, white sugar in London. There are at least 5 features to bear in mind here. The first is the obvious late September to date descending expanding wedge pattern, currently 424.30 to 539.30, highlighted in purple on my daily chart. This pattern has more than the requisite 5 touches, but it was severely tested on the top side over the last 3 weeks. The second is the January 2024 to date downtrend, currently at 555.90, highlighted in bright red on my daily chart. It effectively capped any rises since its start. The third is the April to June 2021 head and shoulders neckline, below the market, currently at 487.60. This had been breached in January, but it seemingly still has some resilience, and the late January rise we've seen, well, this uptrend has been one of the influences that turned prices higher at the time. Fourth, the now flatlining green short medium moving average, currently at 517.10. Now, this had capped prices in the past, is now a potential zone of support, since the market turned and made a weekly key reversal down last week. Further up, we have the medium moving average, currently at 535.5, nearby long moving average, currently at 542.40. This was the start of resistances ahead of the upper trend line, currently at 539.30 of the previously breached and now possibly repaired purple descending expanding wedge pattern. It's now back above the market. Fifth is the most recent market pattern here. Originally, this was the mid-December 2024 to date V bottom that unusually had an extension before the formation of the V bottom itself back in mid to late January. However, the action of the early February created what looked like a mid-December 2024 to mid-February 2025 very imperfect reverse head and shoulders bottom, something that tied in with the New York sugar market. This one no longer looks valid, and I will be retiring this idea after this commentary. Okay, so those are the main features of this market. Let's now look at what we have going right now. Without doubt, the main feature has been last week's weekly key reversal down that punched down through and closed below the following: bright red January 2024 to date breached and now repaired downtrend. All the moving averages except the flatlining green short medium moving average below. That looks to be the next support below actually, and back below the purple upper trend line of the late September 2024 to date breached and now seemingly repaired descending expanding wedge pattern. In effect, we can take the last 3 weeks action as being a false break higher from this pattern. Thankfully, though, I did not lay out some potential targets. I did lay out some potentials from a break higher from this pattern, but I did not lay out any targets. I'm actually quite thankful for that. So looking ahead, watch what the market does on approach and at, should it get there, the green short medium moving average that's below. Sugar white premium spread. After 42 weeks of discussing the same pattern, more or less in different ways, in late January we saw a confirmation of the break up and out of what was originally a descending wedge pattern that developed into a big bear channel. This event was always on the cards, with the market hesitating for an extended period between late September last year and late January this year at the important neckline extension to the significant February to September 2020 head and shoulders top, currently at 77 even. Now, the big justification of the move higher came 3 weeks ago with a huge weekly combined key reversal up and bullish closing along White Mariposa, closing over all the moving averages. The topside targets for this move higher revealed themselves 2 weeks ago with a primary target X up at 137.5, which is still some way up, and a secondary harder to reach target X1 up in the 154.5 area. So are these targets achievable? Well, yes, but we have a congestion area over here between 128.75 up to 153 even, which is still some way up, and a secondary harder to reach target X1 up in the 154.5 area. So are these targets achievable? Well, yes, but we have that congestion area, which will make target X perhaps harder and target X1 further up just that much more difficult. We are just about to enter that congestion area with a pair of notable 50% Fibonacci lines overhead that will concentrate the mind, and they are the first from the July 2019 to September 22 move at 128.75, and the second from the August to 2021 to September 22 move up at 131.25. Meanwhile, on the downside, well, we really don't have that much below until we start approaching the 85 even zone.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.